All right, it looks like it's noon, so let's get this rolling. Hi, everybody. I'm Dr. Lisa Schulte Moore. I'm a professor of natural resource ecology and management and the co-director of the Bioeconomy Institute at Iowa State University. And I get to host your conversation about carbon today. And I'm really pleased and honored to be able to host Dr. Brent Sohngen. Brent is a professor of environmental and resource economics in the Department of Agricultural, Environmental and Development Economics at The Ohio State University. Dr. Sohngen received his doctorate in environmental and resource economics from Yale and conducts research on the economics of land use change, the design of incentive mechanisms for water and carbon trading, carbon sequestration, and valuation of environmental resources. He's a global leader on today's topic of forestry carbon markets and widely published in this area. He's also co-authored sections of the Intergovernmental Panel on Climate Change reports on the topic of forest and carbon storage. And he's co-authored the forestry chapter of the U.S. National Climate Assessment, in addition to having testified before Congress on these topics. I also want to give a shout out to ISU CARD, the Center for Agriculture and Rural Development. They are co-hosting our conversation with carbon today with BEI. So welcome, Brent. It's great to have you here with us virtually. And just to let you know how this works, I've prepared a few questions for you, and we'll spend the next 20 minutes on those questions, and then we'll open up to questions from the audience and I'll moderate that. Are you ready?
Yeah, I'm ready. Thanks for the introduction, and thanks for including D in The Ohio State University.
You bet.
I always love how everybody else in the Midwest just makes fun of that.
Well, we have to have fun about something, right?
Well, the favorite part was when I think the university tried to trademark D sometime back, right? And that was even funnier.
Absolutely, absolutely. All right, well, let's get going. And my first question relates to sort of the, just a general one to get us started. The forestry sector is well ahead of the agricultural sector in terms of responding to carbon markets. And, for example, you might be familiar with the Ecosystem Marketplace report from August of this year, 2022. And they report that 227 metric tons of carbon equivalents associated with forestry and land use projects were traded in 2021. A substantial amount, for that year, especially comparison to prior years. But also in 2021, comparing that to the agricultural projects, which were just 1 metric ton. And so agriculture is behind forestry in terms of engaging in these markets. And I'm hoping you just provide us with a brief history of carbon programs, measurement, recording, and verification, and credits in the forestry sector.
Sure. Yeah. Thanks for the question, the invitation here. That's an interesting one. So I'll just maybe start. My first engagement in the area was really back in the late 1990s. Most of the carbon markets in terms of forestry started to evolve right after the Kyoto Protocol, which had so a lot of discussion there was whether or not the land base should be part of the Kyoto Protocol, and they ultimately decided it was. And they put some little sections in there that would allow people to get credit for actions taken in the forestry sector and also the agricultural sector as well. That wasn't excluded, but the forestry sector was called out specifically. So after that, of course, everybody realized that, it's a great idea in theory, but we actually don't know enough about it yet to actually do it. So there had to be a lot of science that was undertaken to sort of figure out how to actually develop credits in forests as a result of carbon that might be sequestered in forest, and then somehow trade those in markets. So there was a lot that needed to be done. So a lot of work went into it after that. In the late 1990s, early 2000s, there was an enormous amount of sort of science that took place to try to figure this out. And, huge credit goes out to the a bunch of big companies in the US who, and, people look at them as evil energy companies, but British Petroleum, not even a US company, but they did have a huge number of US assets. American Electric Power, Sunoco, all these companies, recognized that climate change would be a real issue. And they decided that, land use could play a role. It was in the Kyoto Protocol. Let's try to figure this out. So they actually put their money into developing projects, both within the US and in other parts of the world, not so much with the idea that they hoped they would get credits for them, but they also decided that the science had to be done. So part of the money went for the science. So, a couple of projects, one of the projects I was involved in was a avoided deforestation project and a forest conservation project in Bolivia. It was funded by American Electric Power and BP. And the funding went through the Nature Conservancy that funded a local organization there to actually protect the land. The government of Bolivia was involved. It was actually an expansion of a national park. So there were 3 timber concessions on the outside of this national park that they planned to try to exceed into the national park. And what they wanted to do was reduce the amount of timber harvesting and reduce the deforestation that would happen there associated with the timber harvesting. And so the money went to buy out the 3 concessioners and then to expand the park. And the question was, would this work? Would this lead to a net carbon gain? And that was all funded by these companies. And of course they wanted the credits. There's no question of that. But they didn't ultimately get any credits, but they did want them. But they wanted to know if this was actually real, if this could actually accomplish anything. And so this was just one project out of many that companies sort of invested in to try to sort of get started in this sort of forestry area. So this has been going on for quite a while, actually. And they learned a lot from that. I would say from my impression that the Nature Conservancy, as many as any organizations, has been as heavily involved, if not the most heavily involved, in trying to establish forest as a verifiable and creditable alternative for taking carbon out of the atmosphere and doing it in a real and additional way. And they put a lot of work and science into that. They've taken some grief for it over the years, but they've also put a lot of science and work into it and have established some pretty good science on that. So, this has been around for a while. It's been going on for a while. I think the forest part is a little bit further along than the agricultural part, but it's not for lack of effort, right? That in the ag sector, I do remember back in the early 2000s, actually, we got at Ohio State, and there was funding from, I think, Senator Robertson in Kansas had this chasms project and put money into it, where the effort was to try to understand soil carbon and how you could incentivize soil carbon sequestration. So an enormous amount of work went into that then. And it was clearly established also as an alternative, a viable alternative for taking carbon out of the atmosphere and holding it somewhere else. But I think then when the Waxman-Markey bill hit, and that was 2008, and there was big excitement for that. And when that thing went nowhere, and the whole sort of voluntary market at that time, the CCX, Chicago Climate Exchange market, kind of disappeared after that. The interest kind of left, right? So all the things kind of fell apart. So this thing's been going for a while, but a lot of science has been done, and we've learned a lot. One of the thought on that is that, in fact, actually, the forest stuff is big also because of a huge amount of money in this reduced emissions from deforestation. That number that you showed or talked about from the ecosystem marketplace, the forest trends data, I'm going to bet that 75% of that is from avoided deforestation projects somewhere in Latin America, probably a lot of them in Brazil. And these are projects that were begun after the 2007 UN climate change meeting in Bali. And there was an enormous amount of money that came into these avoided deforestation projects from different countries. So really, it was the Norwegians who put an enormous amount of money into that, and they supported this idea of avoiding deforestation. The US government put some money in as well, but these were government actually expenditures, not business expenditures. So a huge amount of, and then actually Brazil did a lot on their own. They had a massive reduction in deforestation between 2004 and 2012 that now can be sold as credits. So that a big chunk of those credits are actually things that came out of this avoided deforestation effort, which has been shown to be a low-cost alternative, a legitimate low-cost alternative for keeping carbon out of the atmosphere. But that's probably where a bulk of those credits are.
Excellent. Yeah, so building on that a little bit, you talked about, the amazing amount of science that was done late 90s, early 2000s in this space. Is it easier to count carbon credits in forestry systems versus agricultural systems, or don't we know yet?
Yeah, I would say the answer to that's yes and no. The yes part is I don't know that it's easier to measure carbon in forested systems so much as it's easier to see the carbon and verify that it's there. So I think there's a little more trust, and even though there's not full trust in either of them out there in the marketplace, but it's maybe easier to trust carbon in the trees simply because they're above ground and you can see them, right? And so we know that trees are 50% carbon on average, and the size of them, the amount of carbon stored in them is definitely correlated with the size of them and the height of them. So there's a lot that can be seen just from observing trees and taking some simple measurements above ground. The below ground stuff is complicated because you have to actually take measurements, right? You have to actually get down, take a measurement of the soil, and then you have to analyze that measurement in the lab, right? So that's just a little more complicated. You have to do those same kinds of measurements in trees eventually because you have to actually, there's some destructive sampling to establish the amount of carbon in different types of trees, different types of ecosystems, but that doesn't have to be done everywhere. That only has to be done in some places. Whereas with soil carbon, it's kind of like it has to be done everywhere, right? Because there's so much variation there and you can't see it. So it's a little more complicated in soil and agricultural soils, largely because of that observation problem. That's sort of my view on it.
Got it. Yep. Great. So you alluded a little bit to the fact that there's even been some, tensions in the forestry sector. So for example, the issue of whether, the generated carbon credits meet sort of the additional and permanence criteria. And there's already been, for example, like a conservation easement placed on forest land, so the additionality piece, or when the forest is eventually harvested, so the permanence piece. Can you explain for the audience whether these are really issues or whether we've developed mechanisms to account for them in the carbon markets?
Sure. Yeah. Those are two of the biggest issues, and they affect both, obviously, soil carbon and the agricultural component, as well as the forestry elements. So let me start with the permanence part, because I think that's easier in a lot of ways. So the permanence idea is that, in a forest, for example, and a forest fire is the best example for a forest, right? If you put a forest in place or you plant a bunch of trees and 35 years later they burn up, carbon went into the atmosphere. And 35 years ago, a company got an offset credit, was allowed to emit some additional carbon into the atmosphere at that time. So all of a sudden, you kind of got this problem that that carbon was supposed to be out of the atmosphere forever, and it's not. It went back up there for a little while, and the trees will regrow, but it'll take some number of years for that to happen. And in that period of time, you got more carbon in the atmosphere than you bargained for. So that's clearly a problem. And it can happen in agriculture. The issue there is the fact that farmers, of all things, they manage their soils, right? And they're managing them to get crops out of them, not for the carbon. And sometimes they plow, right? And that leads to, an increase in carbon in years when they're not plowing or they're using some form of conservation tillage or high levels of residue. And then in years when they maybe till a little bit more, change their crops from one type to another, they maybe lose a little bit of carbon. So it's not there permanently. This is an issue, but there are relatively simple ways to solve it. And one of the things we've been working on, and we're working on this with folks at NCX, Natural Climate Exchange, to try to sort of devise sort of a short-term contract. NCX is trying to develop these one-year contracts that would actually incentivize a landowner just to extend their timber rotation. And these are people who have plantations, to extend their timber rotation just for 1 year. Mm-hmm. And then the question is, okay, what's the value of that extension of that rotation for just 1 year? And it turns out you can actually quantify that, and you can numerically quantify that using basic economics and basic finance. And you can show that, depending on your interest rate or your discount rate, the trade-off is that if a company wants to buy up a number of tons that from these extended rotation projects, 1 ton of emissions is equal to, say, 30 tons of carbon stored for just 1 year. And the equivalence there is in the effect on the atmosphere. That is, the 1 ton of emission has exactly the same effect on the atmosphere as 30 tons of 1 year storage. So this is just a basic economic concept. It's the same concept we use to sort of develop rental contracts for farmers. Why do farmers rent land rather than buy land? Well, they do it because they don't have the capital to buy the land. So just like a person doesn't have the capital to buy a full-term carbon credit, they only have the capital to buy some short-term carbon credit. So that's where a landowner doesn't want to lock their land up for 500 years in a long-term carbon credit. They just want to lock it up for a short period of time in a rental credit. So there's we use these all over the place in economics, and we should be able to use them in the carbon marketplace as well, because the same concept fits. So, so this idea of permanence can sort of be broken down into a series of short-term contracts that are at the discretion of both the buyer and the seller, and that the buyer and the seller can choose to make this one-year contract at a given price. And that if they do that, that the buyer of the carbon, who has 1 ton of emissions into the atmosphere, has to buy up a larger number of short-term tons. It's just a straightforward thing. So we're hoping that really gets some legs and can establish itself in all of the models, actually. So if you go out and you look at the models that that US EPA, that the IPCC, that the European governments, that everybody uses to estimate how much carbon we have to get out of the atmosphere to keep ourselves or prevent ourselves from having 2 or 3 or whatever degrees of warming that people are worried about, those models make the same assumptions that these short-term rental contracts make, right? So they actually incorporate short-term carbon storage in forests. So every one of them have the assumption that if you're going to get to a 2-degree warming scenario, which is the Paris Agreement, it says it wants to keep temperatures below 2 degrees. So that's what everybody in the Paris Agreement is shooting for, right? But the models that they've used to evaluate that are incorporating a series of one-year extensions of rotations, and they're incorporating series of additional conservation tillage for 1, 2, 3 years by farmers, and for no longer than that, right? They'll do it for 1 or 2 years at a time, then they'll maybe till a little bit more intensively, then they'll do a little more conservation tillage, then more intensively, right? So the models have all incorporated it. What we haven't been able to do is get it in the marketplace and get the marketplace to accept it. And frankly, the problem there is it's not the economists, it's really the physical scientists, the atmospheric scientists have a real resistance to this, because they just, they really want the permanent ton stored. So this is a dogfight, and I think ultimately, hopefully, the finance and the economics wins on it, because it's the only way this market's going to evolve. So that's kind of my thought on the permanence. Is there are ways to get through that. I'm not going to pretend that's easy, because there's lots of physicists and atmospheric scientists out there who would prefer not to have these short-term rental contracts. But the problem with that is they're not going to get the perfect solution to climate change. I mean, what they'd like to see is all of us to quit using any energy from fossil fuels like today, right? But that's obviously not realistic. So, the solution to having these permanent things and making only permanent contracts be the only way you go is that you raise the costs of everything else and make it even less tenable that we achieve, this low carbon future we want. So I don't know, this permanence thing, I think we have to deal with it with these short-term contracts and short-term carbon contracts. And if we can get there, to me, this will be a real boon for the agricultural sector, because this is how things like, doing a cover crop for a couple of years, shifting your crop rotations for a few years, right? Just changing things a little bit in order to increase the average carbon you're storing over time by just a little bit. It's only a little bit on your farm. It's a lot when it's over, 300 million acres of farms in the US. I mean, you can actually add these things up into a significant amount. Okay, so this permanence thing is big. Now the additionality thing is harder. So that's the concept that, if a farmer's out there, and all the farmers understand this, is that, especially the ones who've been doing conservation tillage, is that they're toast. They can't get any money, right? There's no value for them, because they've already done what everybody wants them to do. And they've already stored the carbon. So no one's going to pay them for that stored carbon, because it's not additional. So from an economics perspective, that's actually a falsehood in a sense, because this is really just a property right. And it's just a decision that we've made not to allow them to get credits for those. It actually doesn't necessarily affect the atmosphere. I'm going to try to explain how that is. So in the US, we have, and it's easiest for me to explain this from the sense of our forested, our large sort of forest carbon sink. So we have this like 700 to 800 million ton forest carbon sink in the US. So we're sucking carbon out of the atmosphere at the rate of 700 to 800 million tons a year in forests. And that's essentially 10%, 11% of our total gross carbon emissions from the energy sector.
Right.
Okay, so that's already happening. Now, when the US government decides that it wants a 50 to 52% reduction in carbon emissions, by 2030, and this is our NDC, this is our nationally determined contribution to the Paris Agreement under the Biden administration. So we're shooting for a 50 to 52% reduction in carbon, in net carbon emissions. All right, so notice the word net there. So they've already accounted for that gross sink in the forest sector in the net number. So they've actually already taken that sink. I just call this a taking. They've taken that sink and that's already being provided, and they've assumed that it's there, and they've counted it into the overall emission reduction that we want to have as a country. Okay, so this means that the effect on the fossil fuel industry of any regulations that would come, happen to them or us for drivers, maybe we have to pay higher carbon taxes on driving around or whatever to try to achieve this 50% reduction. Those are lowered. We don't actually have to do as much because that forest carbon sink is there. All right, so what's happened is the government has already taken this non-additional carbon and actually assumed it's additional. We've used it as a marketing tool, as a negotiation tool, as something that we use. So the fact is that foresters have given this away for free to others to use, to reduce the burden on them, and they're not getting compensated for it. So, but they are not allowed to get compensated for it because it's not considered additional if they do get compensated for it. So it's kind of a weird sort of property right that we've actually already established for these folks. So this is a real issue. I think additionality is a problem that we have to think through better solutions for. I don't really have the right answers for it, but I can see the problem just like everyone else can. I guess it's no different than the typical conservation tillage farmer who realizes this is a problem. I'm with you on that. Figuring out the policy solution to it seems like a harder nut to crack.
Yeah, but certainly one that needs a lot more time and attention, discussion. Working with farmers, it's those farmer innovators that have figured out, how to do this already. And now they're training everybody else, right? So how do you compensate them not only for doing the right thing, but they're teaching everybody else how to do this now. So
yeah. Well, there ought to be a way.
Yeah.
So the reality is, so let me just throw one other thing out there. So actually, New Zealand has figured this out. So New Zealand has a carbon market, and they pay foresters for carbon. And they went ahead and allowed non-additional carbon to enter into their system in forests. So you could actually sell off non-additional. So if you had already planted some trees, 10 years ago or something like that, and you wanted to stick them into and get credits for the remaining growth for the next 10 year, 15 years of growth before you harvest those trees, you could do that. However, you had to accept a tax if you ever did something different, right? So if, or when you harvested them, you'd have to pay the tax on that emission. So that's a pretty simple solution. And I think actually farmers who are conservation tillage farmers would probably accept something like that. Let me get credit for what I have. However, if I ever omit it, I will sign a contract that says I pay a tax on that. I bet many of them would, because I don't think most of them conceive of themselves as having to actually plow their land in the future.
Yep, great. Thank you for that answer. That's really super helpful. One of the things that you mentioned, during that discussion is buyers and sellers. There's also aggregators. You mentioned BP early on. You mentioned TNC. Just want to get a better sense of who are the players in the forestry sector that are leading in this space. And then there's also these aggregators, right? Just give us a sense of who these players are and what their motivations are.
They're all over the board. Just some of the ones I'm familiar, organizations like Finite Carbon, Blue Source, a few of the bigger ones who are sort of, they seem to have emerged out of smaller projects, smaller efforts, and just sort of accumulated projects over time. A lot of it emerged from efforts in the California cap and trade system allowed for carbon offsets to enter into as an offset to the cap and trade system. And so a lot of these sort of emerged out of that effort, and they've sort of gone nationwide. So there's a number of them out there that their motivations are, there's multiple motivations. I'm sure there's profit motivations in some of them. Some of them are nonprofit organizations that are trying to just connect up resources with forest protection because they want to have the conservation and maintain the land as forest rather than allow it to become suburban. The big issue in forest loss nationally is suburbanization and urbanization, not a really competition between forestry and agriculture in the US at least. So a lot of these organizations are interested in trying to help maintain land as forest and help protect it a bit from some of the losses that might happen in suburbanization. There's also in the forest area, we actually have a huge number of forests out there that are understocked in the US. And some of these are in the West where there have been fires in the past. And it takes a little while for the reforestation to happen. In the East, there's all kinds of reasons for understocking. Maybe it has to do with the condition it came from, maybe because there's an old field succession, or there might be excessive deer browse. Everyone knows there's just an excessive number of deer throughout the Eastern US, and that they eat a lot of trees as they're trying to grow. So there's all kinds of reasons for these low stocking. So a lot of these organizations are trying to improve the forest condition and see, see the carbon finance as a way to do that. And so that's to me, that's sort of a big set of the motivations out there, in addition to sort of the profit motivation. Winrock, through the American Carbon Registry, has been a big player over the years in terms of designing actual tradable instruments, as has Vera. I think Vera was VCS, Voluntary Carbon Standard, for a long time. I think they actually emerged out of Conservation International, I believe. The gold standard is globally, I think, more prominent, less prominent, say, in the US, but they emerged out of WWF, I think, or something like that. So a lot of these large global environmental organizations sort of staked out some space 15 or 20 years ago, and 25 years ago, in the not so much in the aggregator space, but in the space of being the ones to sort of verify and design the contracts and the mechanisms. So they're the bigger ones in that. I think there's opportunity there for more organizations to emerge and do it. Because I think, frankly, on the permanent side, I think that some of those organizations have made mistakes. I don't think they've thought through well enough the economics of the permanence issue. And so maybe some competition from some other organizations who could design tradable instruments and tradable contracts and verify them a little more efficiently and effectively in an open source manner might actually be a better way to go. So there might be some emerging competition in that. I don't know.
Excellent. Well, we're going to switch over and let the audience questions, or I'll moderate some of the audience questions. We already have a few. One is just a clarification question based on my question right away. So it was 227 million metric tons in the forestry sector in 2021 and 1 million metric tons in the ag sector in 2021. So I just want to verify that. And then a question about following up on the 50% of carbon in trees. So right now in the forestry sector, are they even getting into the soil space at all, or are they just looking at the above ground space and counting the trees basically?
Yeah, that actually depends. If the project includes afforestation, then there's an avenue for including the underground storage, so the below ground storage, I should say the soil organic carbon. The above ground storage actually automatically includes the roots. And so there's a component of below ground storage anyways in the above ground numbers, just because that's how the tree carbon is measured. They account for some proportion of that in roots. There's sort of a traditional root to shoot ratios for different tree species and ecosystem types that are used for those. But however, when you're doing a forest management project, and it's just sort of improved forest management, then there's no assumed change in the soil carbon in most of those projects. And I think the reason for that, there might be soil changes, but there's a lot of evidence that suggests that it's not actually big enough to measure relative to the above ground changes.
Got it. That's very helpful. Thank you. Got a question from someone, says they're working with American Indian tribal lands, American Indian tribes on tribal lands in New Mexico for reforestation and monetizing the efforts with carbon credits. Any recommendations for tree species in that part of the world, or the best approach to start engaging in the carbon markets?
Yeah, I would. Yeah, that's a really great question. I guess I'm assuming in northern New Mexico, it might even be in some areas that are sort of mountain, and there would definitely be a number of tree types that would be sort of preferred, lodgepole, probably not ponderosa, but mostly probably lodgepole types, a few other species. There might even be some hardwood species, especially if there are some riparian zones along in the area where you have. So I think there would be some good recommendations. I think offline, I could hook you up with some people in the West who could help out on a project like that, or thinking through some alternatives for that. So for sure, just send me an email, and I think I can help sort of find the right individual. I'm having trouble thinking off the top of my head and sort of stating it out here, but I just would have to think about it a little more and find the right people for that particular area.
Great. And thank you for offering your time for this person. That's great. So another question related to permanency, and you mentioned the carbon credits acquired for protecting forests in Brazil. There's been sort of a policy shift in Brazil under different administrations, and so how do the carbon markets manage these kind of situations when there's significant policy shifts in a country?
Well, I mean, that's a really great question. I think in terms of some of the avoided deforestation issues, that they've raised a good sort of permanency issue. That's why I would go back to the actual short-term carbon credits and short-term carbon crediting that in a paper with Zach Parise and others at NCX, we sort of recommended. And so the idea there is, Brazil had this, basically we're deforesting more than 2 million hectares a year in the Amazon, prior to say 2004. And by 2012, they got that number down to about 400,000 less hectares per year. It's since come back to about 1 million hectares in the last couple of years. So it's risen back up again to a relatively high level. So sort of two thoughts on that is that, that big, and it turned out to be about 700 million tons of carbon avoided deforestation. If you were to sort of assume the historical 5 years before 2004, for the period 2004 to 2009, and then sort of from 2009 on, you take the 2004 to 2009 period as your baseline, which is a little lower level of deforestation, so you get fewer credits at that point. But the average over that time period was about 650 million tons of carbon dioxide avoided per year. And that's a huge number, right? That could be then marketed. So if you were to just assume that those are permanent and sell those one for one with a ton of emissions into the atmosphere, that's one alternative. And then of course you'd be in this problem now today when tons are starting to be emitted again in Brazil because of the policy change. Maybe some of those tons that are being emitted today were some of the tons that were paid for before, right? That is an issue. However, the approach NCX suggests is let's just do a series of 1-year contracts and just, rather than 650 million tons for 650 million tons, you actually have this sort of, if you assume a 3% discount rate, you have something like 35 or something tons of 1-year storage for 1 ton of emissions. So instead of 600 to 600, for the 600 you had emitted, or I should say the 600 million tons that you avoided emitting, you have to divide that by 30, and those are the tons that you can then offset with, right? Mm-hmm. And if you do that, then you've already incorporated right at that moment when you make the trade, the potential future change in policy. You've incorporated the potential future losses there, and you've accounted for the risks of those losses, right? And you put it right there in the trade at that moment, and you don't have to worry about that after that. So a person way back in 2004 who paid for, or got this 600 million tons wouldn't have gotten 600 million. They would have gotten 600 million divided by 35, right? They would have gotten a lot less of a deal out of it. So, I think there's ways to handle that if we're just smart about it. And I think these short-term contracting mechanisms can actually handle that. So I don't deny that there's a change in policy and there's a potential implications of that. But the problem is we should have made the trade correct back when we did it.
Mm-hmm. Got it. Yep, very helpful. All right, a question about asking if you can talk a little bit more about the fall of the Chicago Climate Exchange and what, if anything, can projects for the future learn from that and in terms of offset markets?
Yeah, the Chicago Climate Exchange was intended, I think when Richard Sandor and sort of developed that in the early 2000s, it was really intended to be an on-ramp to a federal trading program that would emerge from a federal cap and trade system. So it's intended to be a prime way in which that cap and trade system at the federal level could, could sort of, could facilitate the set of trades that would happen on an established exchange. When the 2008 Waxman Markey bill sort of fell apart, and it was pretty clear that there would be no cap and trade system at the federal level, that it would we'd only see a cap and trade system at the local level, say in California. I think the rationale for a voluntary cap and trade program like that sort of fell apart. That there wasn't a value proposition anymore for having that on an exchange like that, that it was more likely that these trades would happen on a one-to-one basis between interested parties. And so I think that's why it kind of fell apart. Whether that logic still exists today and whether there may be an opportunity to restart something like that, I don't know. I think it takes smarter people than me in finance to sort of figure that one out. But I think for that period of time after 2008 and sort of the last couple of years, there was a real dearth of interest in trading any of this stuff at the individual level. Everything was just happening on one-to-one sort of one-off trades.
Yep. So another forestry question. So from a forestry management perspective, is there a trade-off between hardwoods and softwoods in considering incentivizing, potentially incentivizing more hardwood production in the traditional pine forests of the southern US?
Yeah, that's a super interesting one. It's I got a paper from 2006 that really says that one of the big problems we face is we're converting a lot of hardwoods to softwoods because that's what's kind of happening. For a long time, the pine plantations in the South were established on old agricultural land as farmers were sort of, losing interest in farming the same pieces of land, and people maybe were moving on from farming to something else. They would and they didn't want to farm it anymore. They just put it in trees, and eventually by the late 90s, early 2000s, more and more actually plantations were being established on old or actually on hardwood lands, and so that was becoming kind of a concern for hardwood habitat. And it is true that at that time established hardwoods had more carbon than plantations that would only sort of age to 30 years or so, right? So I don't know that's true anymore, given the improvements in seed stocks on the softwood side, right? Because we've really improved those seed stocks so well, and they've become real powerhouses. The evidence now is that they're really actually the biggest chunk of our carbon sink in the U.S. is in the U.S. South in the softwoods. So from a carbon perspective, softwoods really, especially planted softwoods are an enormous carbon sink. I'm not making an argument that we should turn everything into softwoods, but if you're simply in it for the carbon, that seems to be a big opportunity there. However, hardwoods in many locations are probably going to be the primary species, especially in the uplands locations on sites, traditional sites for hardwoods in the South. They're probably going to be the best opportunity, especially if you're a landowner who doesn't want to have to actively manage and doesn't want to actively do a lot of stuff over a long period of time. I think that's probably the best option, and especially if you want other habitat, right? If you're interested in not that softwoods don't also have plenty of species in it. It just seems like hardwoods have a much more diversity of species, especially in the trees themselves, but also in the birds and other kinds of species that might come along with it.
Mm-hmm. Yeah, fantastic. Well, there's a lot of interest in what you have to talk about. We're getting lots of questions. Here's one more on the additionality piece. Are you hearing of any, real lobbying going on in the U.S. here for a plan like that, what they're using in New Zealand that you suggested, like tax, provide these short-term incentives and then tax them if they then change practices?
I'm not, but I think there should be. I think there should be lobbying on that. I don't. It sounds like that's just a tax alternative, but I think the idea is it's a voluntary program. Right now, it's the New Zealand approach too, right? That it's not like you're just going to tax somebody if they do conservation tillage and then don't do it. But the idea is you actually, if a person voluntarily takes their land that they've already done conservation tillage and put it in this program, then they agree to a tax in the future if they then don't do conservation tillage. That I think that should be part of. I think we should be, the federal government should be investigating that. To me, that's why you would have a. I wasn't a big proponent of the Growing Climate Solutions Act as it was originally recommended, but to me, if you were going to do something like that, this is the kind of program you would do. You would use a federal program like that to handle the additionality problem. And I think that's the most effective way to do it, because I don't think the market can actually handle it. It has to be handled sort of from the federal level.
Great. Yeah, one question about the short-term contracts publication that you were talking about, where you lay out that rationale. Could you just kind of tell us what journal that's in, so somebody that's looking for that paper knows where to find it?
Sure. Yeah, it's in the Journal of Forest Policy and Economics. It's by Zach Parisa, Parisa et al. Myself and others are on that paper, but Zach was the lead author on it. But Forest Policy and Economics, it just came out a couple months ago.
Great.
I can try. I'll try to find it, and I can put it in the chat if I can find it.
Okay, excellent. Let's see. A question: do you have any concerns about increasing investments and funding on new efforts, creating protocols ensuring the quality of the voluntary offset market, such as specifically the Leaf Coalition? The Biden administration evidently is funding this. I'm not aware of that one. Do you think that the money should be spent differently to mitigate forest deforestation? Yeah, that's.
No, I think that I think new efforts to create protocols is actually a good idea. I'm a little skeptical of the government doing them. I feel like the private sector on the protocol side is better at doing this and thinking those things through, and can do it more rapidly, and actually can make it open source and can do all the things you'd want to do to make it effective. I think the government's role is in the property rights issue on additionality. I think that's the place where we need the government. I don't think we need the government on the protocol side. So that's, maybe some people think that's a difference without a distinction. I think there's a big distinction there. So I think some of that I do worry about, but actually, I think on the protocol side and developing actual tradable instruments, that is, I'm thinking of, when I say that, I'm thinking of, the rules for what makes a credit or not a credit. So it'd be like the things that, conservation. So for example, right now, let's say, for example, a soil carbon credit, that is, you would get credit for having this information on the amount of times you use cover crops on this piece of land over the last decade. And then you'll get credit based on how you use those in the future. And here's the information you have to provide every year to the verifier, or keep on your system so the verifier can get it when they ask for it every 10 years or whatever, right? So that's what I mean by the protocol. It just lays out all that information. To me, that's just better done by the private sector.
Got it. Yeah, well, there's lots of questions here. I apologize to our audience that we're not going to get to all of them. We just have a few minutes here to wrap up. And I'm just wondering if real quick, Brent, you could say, what are the top 3 lessons that the ag sector can learn from the forestry sector in this space?
Oh, yeah, I think to me, the top one is that, that to keep studying the issue, I think financing research both through the private sector and the public sector is really important on this, because I think, we're going to keep learning things. And I think that the permanence thing is one that's, for instance, it looks like it's a done deal what permanence should be, because, California defines it as holding your trees for 100 years, right? It's a ridiculous thing. It's signing a contract that says your trees will be there for the next 100 years. I mean, what landowner is going to do that? I mean, they're not. That's why it's so expensive to do. But we can rethink that rule and maybe come up with a better rule that actually works better for people and accomplishes the same goal. So I feel like just keeping at it is the key one, and keeping at it on the science side, because there is legitimate science that has to be understood. I think a second thing is that that the finance can be there, and I think it can actually be beneficial for the agricultural sector and the forestry sector. And we do have, it's incumbent on us to figure out how to get that done. And that's, to me, a private job. So I look at it this way, the IPCC says, or the global bodies that watch all this stuff say, to get to 1.5 to 2 degrees, we need something like 11 billion tons of this stuff globally. And we're going to need something like, $200 billion a year within the next 200 billion a year finance to landowners to do this stuff. That's not coming from any government I know. I mean, our government's not paying for it. And if our government's not, no other government is. So, that's private sector money. So we have to, we have to do it through the private sector. So I think just keeping open eyes to the private sector is kind of the way this has to be done.
Great. Well, fantastic. Thank you so much, Dr. Sohngen. It's been really great to be able to chat with you about these important issues that relate to our economy, as well as the health of our planet. And, we're really focused here on agriculture. It's not that we don't have forests in Iowa. It's just, they're on the margins compared to our agriculturally dominated landscape. And I certainly learned a lot from you. For the audience, you can find the Conversation About Carbon series online at the Bioeconomy Institute website. This and other previous conversations have been recorded and are up there on our website. So if you want to refer back, you are certainly welcome to do so. Our next conversation about carbon will take place on November 16th at noon Central Time. And we will be hosting Ryan Clark from the University of Iowa, and he's going to talk about Iowa's capacity for geological carbon storage or sequestration, Iowa's capacity for geological carbon sequestration. So again, thank you so much, Brent. It's been really lovely to have this or be able to chat with you about these topics. And thank you to the audience for tuning in.
Yeah,
have a
thanks
great
a lot,
day,
Lisa.
everybody. Yep. Thank you.